Dornbusch download, Michael. That time of the week again.
Yeah, good morning, Dan.
It comes around quick, doesn't it?
Wednesday does come around way too quickly. Absolutely.
We know when it's hump day, it's on. Then.
Very, very true. No, and of course a lot happening as well, isn't it? I mean,
there is a lot happening.
We've spoken about it the last couple of weeks for first half reporting season, or most companies' first half reporting season, a couple of full year results.
Some 168, would be about right.
Yeah, sounds about right. And thus far, been reasonably okay.
Yeah.
Hard to get a real handle on it, of course, because there's different opinions, different consensus numbers. So trying to sort of consolidate and see who, which companies beat expectations, which companies missed expectations. Always a bit tricky, but all in all, looking like it's been a reasonably positive outcome.
Yeah. Yep.
Thus far.
And a lot of companies, surprisingly, have actually hit the expectations on the knocker, haven't they? So pretty good guidance being given to the market generally. Yeah.
Under enormous pressure now, aren't they, to keep the market fully informed?
Yes, and we've seen those ones that miss guidance, they've really been hammered, haven't they? So.
Absolutely, and that's it. And when you see those big price fluctuations, ultimately it's just telling us the market wasn't expecting it, whether it be a positive or negative, and of course very violent swings when it does happen. But Janet Yellen giving us some reasonably, a reasonable level of comfort, I suppose, basically reinforcing that interest rates in America probably aren't going to go up until the latter half of this year.
Yeah, what'd she say? Employment low and wants to keep inflation at about 2%. So
market like that news, and certainly at this stage, US interest rates looking like not going anywhere for the immediate future. And certainly too, Dan, of interest, there's a probe in America now, some of the banks into fixing commodity prices, metal prices.
I was also reading an article from the London Metal Exchange and their New Orleans warehousing that zinc seems to walk out the door and then gets hidden away, push the price up a bit and then sort of comes back in. So they're trying to change reporting around that as well. So.
There'd be a fair bit of cloak and dagger stuff going on there. But it'd be interesting to see what comes out of this probe. Of course, the last year or so, there was the probe into the LIBOR fixing the London interbank offer rate, and some of the banks over there got some pretty hefty fines, based on their manipulation. Absolutely. I mean, billions, if not trillions of dollars, of investors' money relies on this sort of information. So, it's certainly not
it's got to be above board.
Absolutely right. Yeah. So Dan, what are you buying at the moment?
Well, there's a couple of stocks, Michael. One of them being Challenger. We go to those Challenger presentations, don't they? And they're really targeting, retirees, and basically by saying invest with Challenger in an annuity for those fixed bills, aren't they, like electricity and phone, etc., etc. And the government changed, or Centrelink changed their rules around those care accommodation bonds. So there was a bit of uncertainty there. That brought the share price off. They've come out though, and they've given guidance for growth of about 11 to 13%, paying a 14.5% dividend, which is still cum dividend until the 2nd of March. Australia has something like the world's 4th largest pension market, and over 65's increasing by 40% over the next 10 years. So, there could potentially be a lot of money flowing into annuities. And perhaps it could be a takeover target with the big banks want to expand in that way too. So
they've had a good handle on that market now for a good while, haven't they? Certainly, been very strong.
And that side of the market is really heavily regulated as well. So, there's a level of comfort in that as well.
Absolutely.
And what have you been selling this week, Mike?
Yeah, Dan, I've been taking a few profits out on ALE, a property. Quick history lesson. Basically, ALE Property bought the Foster's pubs back in 2003 and effectively leases those pubs out to Australian Leisure and Hospitality. Basically, not a full subsidiary of Woolworths, but I think Woolies owns 75% of it from memory. So it's been an extraordinary investment over that period of time. Even through the financial crisis, it was one of maybe only a handful of property trusts that didn't get absolutely poleaxed. So it's been a fantastic investment. Just looking like it's a little bit top heavy. The first half result was okay. Distributable profit was a little bit lower than what the market had expected, but they're now talking they may have to borrow a bit of money to keep that dividend
yeah.
Out at the current level.
And that's pre-GFC-ish, isn't it? That's borrowing for dividends.
It is, so it's just starting to get that little bit of a feel about it again. Debt levels with ALE currently pretty reasonable, about 51% gearing, but yeah, certainly this could kick it up a little bit. PE of 27 times.
That's up there as well.
Yeah, earnings growth pretty mundane, so they have gone ex-dividends, so look, I reckon take a bit of cream off the cake on that one.
Yep. Very good. And that's about it. Anything else coming up?
It is, mate. No, pretty economic-wise, pretty quiet again. Again, really the last couple of weeks, just company reports has absorbed the market. Yeah. We're going to be getting US GDP figures on Friday night.
Yep.
Market expecting about 2.1%, so those growth figures starting to wane a little bit. But
they say the housing's starting to wane a little bit as well, don't they? So.
But as we've said in the past, I mean, the US growth story's been very strong in the last couple of years, so no real surprise to start to see it take a bit of a breather. So, but yeah, and of course too, really, this is the end of the official reporting season as well. Yep. There'll be a few more stragglers to come out, no doubt, over the next couple of weeks, and then into bank reporting season. So enough to keep us busy.
I think so. Thanks, Michael. Thanks, viewers.
Thanks for your time. See you next time.